until now.
More than just business news, we're news for business people.
Good morning and welcome to Bloomberg Quint Live. This is DayBreak and I'm Alex Matthew. Here's a look at the headlines. Asian markets opened mostly flat after an oil rally fizzles and copper prices soar overnight. The government raises its gross borrowing target for the first time in 6 years. It will borrow 50,000 crore rupees more than earlier planned. SEBI asks Axis Bank to conduct an investigation into an alleged leak of its financial results on WhatsApp. Gives the private lender 3 months to complete the inquiry. And all eyes are on SEBI's crucial board meet that will happen later today. The market regulator is expected to take a decision on debt default disclosure norms. It may also finalize rules for listing of receipts issued by asset reconstruction companies. Over to international markets now, and US stocks edged higher on Wednesday. The volumes remain thin. It's the holiday season after all. The session was characterized by gains in technology and healthcare shares. Bloomberg's Julie Hyman wraps up all the action from Wall Street in this report.
U.S. stocks were little changed, pushing slightly higher on the session. No surprise here in this holiday-shortened trading week, and of course the last trading week of the year. Volumes were well below normal levels. For the S&P 500, volume about 45% or so below the 20-day average. We did see some groups outperform interest rate-sensitive sectors in particular, like real estate and utilities, and that's as we saw a pretty sizable decline in the 10-year Treasury yield, a drop of 6 basis points to 2.41%. And that 6 basis point drop was actually the largest that we have seen since September 7th of 2017. So a little bit unusual there, at least compared with recent activity. In terms of individual stocks that were on the move, Tesla took a little bit of a hit, and that's after a note from KeyBank analyst Brad Erickson, who said that fourth quarter store checks showed that Model 3 deliveries tracking to about 5,000 units, which is below the sell side estimate. So Tesla shares finishing a bit lower. On the opposite side, we saw marijuana stocks, many of them listed in Canada, trading higher. That's ahead of the January 1st recreational marijuana legalization that is set for California. So it looked like traders were buying ahead of that date. Julie Hyman, Bloomberg News, New York.
Let's take a look at Asian markets, and they've opened largely unchanged as well. If you look at the Nikkei, it's currently just about 0.03% higher, and that's pretty much the case for the early risers apart from the Nikkei as well. But we'll keep you posted on all the developments from the Asian markets over the course of the day. Let's turn to the Indian markets, though. Jayesh Khilnani is here to sum up what to expect in trade today. Jayesh, morning. What are you looking at today?
Morning, Alex. Expiry will be on top of the mind. But given that we've not had extremely positive cues coming in from the West on account of the holiday season, overnight the US market, like you were mentioning, closed largely flat to positive. And the SGX Nifty is suggesting a mild uptick for the Indian market, and also indicating that the Nifty is likely to start above the 10,500 mark. But moving on to the other commodities and the FX space, if you have a look at the oil prices, that have actually slipped below the 60 mark after gaining by about 2.7% the day before. As far as gold prices is concerned, we are seeing that gold has actually climbed above the 1-month high and now trading above the 1290 for an ounce mark. As far as the base metals is concerned, we saw the LME base metals resume trading post the holiday season, and that has extended its rally to 9 straight days now. Moving on to the other asset classes like currencies, the dollar index has actually touched a 3-week low, which bodes well for gold prices as well. The other constituents of the dollar index, the euro climbed about 0.1%, and the pound also climbed about 0.07%. The rupee, however, slipped to about 64.15 levels and saw a decline of about 12 basis points. Now, coming back home, the flows that we have been seeing today, we are seeing a reverse in the direction. So the FIs have actually net bought about 172 crores in cash, while the DIs have sold about in excess of 200 crores. But for the month, the trend remains intact. FIs have been net sellers to the tune of about 6,500 crores, and the DIs have pumped in nearly 8,500 crores. Now, a quick recap of what happened yesterday. We saw that the Nifty was trading largely flat for most part of the day. However, post 2 p.m. we saw a sharp sell-off, and that's the reason you saw the 40-point downtick for the Nifty. As far as the India VIX is concerned, we saw a second day running that it spiked more than 3%. So that will be in action, and obviously the FNO expiry as well. As far as individual indices are concerned, Nifty Pharma was back in action, with the index itself gaining about 2.4%. Now, this was largely led by Sun Pharma, which gained more than 6%. On the decliner side, we had the Nifty Bank and Nifty Energy, which slipped about 0.7 to 0.8% each. As far as individual contribution is concerned, Sun Pharma, like I was mentioning, it gained about 6.5%, so it contributed 10 points positive, but not much to read in the gainers. However, the losers, the Nifty Bank that was reflecting on the screen earlier, so ICICI Bank and HDFC Bank contributed about 15 odd points to the decline, and so did RIL and ITC. Mind you, all four of them are index heavyweights. So we'll have to wait and watch what really happens. The clear direction, FNO expiry, Agam, what are the cues that you're picking up?
Right, so rollovers are picked up. That's perhaps a positive for those who are long on the index. Well, let me start off with what's happening in the Nifty right now. As you can see, unwinding naturally in the December futures, and we will have more building up of positions in the January and the February futures. Of course, the underlying hasn't seen too much change. It's the same for the Nifty Bank futures as well, where the Nifty Bank futures, again, looking at some amount of unwinding, but the index has fallen a lot more than your benchmarks such as the Nifty 50. Moving on with respect to the VIX, it's moved up around another 4%, back above mark of 12. And well, with that, as far as the rollovers are concerned, as I was suggesting, they have picked up, currently standing around 51%. We'll be watching out for this final number today. That is when we see all the contracts of December expire. Nifty put call ratio, of course, has remained unchanged at around 1.59. Moving on in terms of changes in open interest, we saw a lot of activity once again around the 10,500 mark, as one might expect, an unwinding in the 10,500 calls and puts, but a little more writing coming along 10,600, which may perhaps suggest some amount of resistance in today's day of trade. That said, of course, in terms of changes in your stocks, we have Reliance Communication and TV18 once again enter the futures and options ban. So we will see restricted trade in these counters, and Adani Power sees fresh longs. This is, of course, we've seen unwinding in the December futures, but on an accumulated basis, we're looking at more addition of open interest towards Adani Power futures. So we will be seeing about more fresh longs there, and we'll be watching out for these as we move into today's day of trade.
Absolutely. Thanks for that, Agam. And Agam will be back later today with a special show on FNOs. That's at 10 o'clock today. Today is the best day to watch a show on FNO. It's expiry. But let's move on to a particular stock that we're talking about. Mohnish Pabrai of Pabrai Investment Funds says that while he has seen handsome returns from his investment in Rain Industries, he still sees more upside on the stock. Here's a small portion of his conversation with Neeraj Shah on our special series, Alpha Moguls.
Let's take the classic case of Rain Industries. Now, you've bought it way earlier. This is not a recommendation from Mohnish Pabrai by any stretch of imagination, but I just want to know, it's an investment that has compounded well for you in a short period of time, but it's given you maybe 8x or 9x returns already. So it's been the compounder that you would probably seek. Most people would be happy with a 10-bagger, a large 10-bagger. You've gotten one. How do you know that this is not the time to get out of it? Are you giving the leeway to the management, or are you studying the cycle of the business so well enough that you believe that there is more in store?
Okay, so first disclaimer that my views may change tomorrow.
Of course.
Right, so this is a dynamic thing, and they're valid at this point in time, and it's the best what I can say at this point. So I think, first of all, Rain is interesting because after I bought it, for 18 months, it did nothing. And then, but this is the nature of equities, is they go through long periods of doing nothing and short periods when they do a lot. So even if you study markets over long periods, in the US, for example, from 1965 to 1982, the index, the Dow, was flat, 878 to 878, 17-year period, and the US grew a lot in that period. Then from 82 to 99, it grew a lot. It went from 800 to like 12 or 13,000. So equity markets have this habit of not being smooth, right? And so Rain was an example, extreme example, because it sat doing nothing for 18 months and then, went wild and crazy, if you will. I had a certain understanding of the business before I made the investment. And most of that understanding was because someone sent me a very nice report on Rain, and it made it obvious. In fact, basically based on that report, the price I was paying for the stock in 2015 was likely to be the earnings of the company in 2018 or 2019. So I was basically buying in 2015 at PE of 1 in 2018 or 2019, and it was a profitable company. So anytime you can do that, you don't need to think about it too much. And so I thought at the time before I bought Rain that probably in a 5-year period, we might make somewhere between 5 and 10 times our investment. So it was a very obvious no-brainer type investment. I tried to buy every share I could. We'll see where we end up, but I think my sense is it's got some room to run.
Yeah, okay, but this is, remember, again, I stand
But it's not a stock tip. Yeah. I wouldn't be buying at present prices, but I'm just not willing to sell at present prices.
Sure. I just wanted to know that buy and sell.
I would not recommend Rain as a screaming buy at this point.
And that's just a portion of that conversation. Watch the entire conversation at 10:30 a.m. only on Bloomberg Quint Live. Let's take a check on the rupee and the bond market now. And Saloni Dhanuka joins us on the show. Saloni, we're going to be talking about this update, the one on the gross borrowing increase by the government, but sharp reaction expected in the bond market today. IDFC, for one, is expecting the yield on the 10-year benchmark to go to 7.3%.
So Alex, I'll just start with bonds because you touched over the bond market topic, and so bond yields yesterday actually touched a fresh 17-month peak of 7.31%. In the early Asian trade, on the news that the data showed a slowdown in tax collection under GST, thereby fueling speculations of higher borrowing by the government. However, it erased all the gains and it fell nearly 6 basis points by the end of the day, and it closed at 7.22%. Also, later in the day, post the market hours, Central Bank released a statement indicating that India will borrow additional 50,000 crore rupees of bond in FY18 itself. So that's about bond yields, and we could see some reaction in the yields specifically in the opening trade today, so do keep an eye on that. While talking about Indian rupee tracking losses in the local equity and Asian currencies market, it ended lower at 64.16 levels against the dollar for the second consecutive session yesterday. The home currency ended at 1 week low on the back of sustained capital outflows and a sudden spike in crude oil prices globally. Now on the global front, dollar index breaks the crucial 93 mark and it now trades near 3-week low at 92.90 levels. The index has fallen close to 9% so far this year, thereby putting it on track for its steepest decline since 2003, when it dropped nearly 15%. Conversely, the euro has been the best performing currency in the year. It has appreciated over 12% so far this year. Now coming back home, dollar rupee is trading higher, marginally higher by 5 paise at 64.10 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for Indian rupee in today's trade. And also, Alex, global funds decreased their rupee debt holdings yesterday. After infusing approximately 1,500 crore in the past 2 trading sessions, they have decreased their portfolio by approximately 300 crore yesterday, according to NSDL data.
Thanks so much for that update there, Saloni. But Saloni just briefly touched upon this, and I want to talk about it in much more detail now. The shortfall in indirect tax revenues following the implementation of the GST has essentially forced the government to do something it hasn't done in 6 years. It's already been talked about, but we're talking about it now. It'll increase the gross borrowings from the market above the budgeted amount. The increase is about 50,000 crore rupees, taking the total market borrowing in the current financial year to 6.3 lakh crore. Here's the analysis on the update by Ira Duggal.
The market has been waiting to hear from the government as to whether it intends to borrow more than the budgeted amount in the current fiscal. Well, they got half an answer today. So the government in a press release said that they intend to borrow 50,000 more from the markets in terms of dated securities. Now, that would take the gross borrowing up to 6.3 lakh crore from the earlier targeted 5.8 lakh crore. So just on that number, this is the first time since FY12 that there has been a substantial increase in the government's gross borrowing program during the course of a fiscal year. The story, however, does not end there because in its press release, the government sort of confused the matter and said that they don't intend to have any net additional borrowings. And they said in explaining that that they want to see, or they expect to see, 61,000 crore in T-bills roll off. Now, a lot of bond market participants and economists that I spoke to were not clear on exactly what the government is saying because at the end of the year, the outstanding T-bills will be at least 23,000 crore more than what they had budgeted for, which was about 2,000 crore. The gross additional borrowing actually works out to 50,000 in dated securities and 23,000 in T-bills. That seems to be the math that the market is working on. The government, however, says that there is going to be no net additional borrowing, and no one is entirely clear how that is going to play out. But even if you give the government the benefit of the doubt and say that there will be no net additional borrowing, the bond market participants say that they remain focused on the increased supply that will come due to the higher gross borrowing, particularly the increased supply of longer dated bonds, which would mean that, say, the 10-year bond yield, which is the benchmark bond yield, that would continue to remain at elevated levels and even perhaps rise from levels at which it closed at in trade on Wednesday. So you had the yield go up to 7.3 and then it came down to about 7.22 on close. What bond market participants expect is that tomorrow when yields open, you will again see an uptick. What is also unclear is whether this borrowing math means that the fiscal deficit number of 3.2% will be maintained or not. Now, Aditi Nair of ICRA says that it neither confirms nor denies any fiscal slippage. Another senior economist that I spoke to said that if you look at the gross number, it suggests that there will be considerable fiscal slippage. But again, until the government actually comes out and clarifies its position, there remains some ambiguity. But the net takeaway from this particular release is that bond yields would remain high. The bond market remains worried about increased supply of bonds and also the fact that next year could be a tough year to meet fiscal deficit numbers.
We'll have to wait now for some clarity on the government from what it says in terms of the math therein. But the government on Wednesday also cut the interest rate on small savings schemes, including Public Provident Fund, the National Savings Certificate and the Kisan Vikas Patra, by 20 basis points for the January to March period. The move could prompt banks to lower deposit rates. Shifting focus to commodities now, and Jayesh Khilnani is back with all the updates therein. Jayesh, base metals and particularly copper in focus.
Yes, Alex, that's right. So the LME base metal index climbed about 1.6% after resuming from the Christmas holiday. This is the 9th straight session that we have seen the base metal index gain for itself. Now the gains were largely led by copper, aluminium, and lead actually snapped its 4-day losing streak. But copper has touched a 4-year high and climbed about 1.6%. Now this is the longest winning streak that copper has seen for itself since the year 2004. 9 straight sessions of gains coming in for copper. Lead, I was telling you that it snapped its 4-day losing streak and climbed more than 2%. Aluminium also, gained for about 8 days in a row and ended up nearly 3%. Now, we can see similar action come about in the Shanghai Futures Exchange, except for steel, which is actually trading down 1.4%. On the other hand, gold prices have hit a 1-month high and gold futures have climbed above the 1290 mark. Now, there is a comment by UBS in which they say that gold is good as per our insurance value. The other factor that is helping gold is the dollar index, which is now at a 3-week low and has slipped below the key 93 mark. As far as oil prices are concerned, we saw that overnight oil prices declined marginally after hitting that 2015 high post the Libya pipeline blast. Now, the production has gone down to about 1 million barrels for a day from Libya. But the real factor to watch out for as far as oil prices are concerned will be the API report, in which it is likely that they will report a US inventory decline or to the tune of about 5.96 million barrels for last week.
Thanks so much for that, Jayesh. Moving on now, market regulator SEBI has issued directions to Axis Bank on the alleged leak of price-sensitive information on its financials through WhatsApp. Sajid Mangat has all the details in this report.
Market regulator SEBI has asked Axis Bank to undertake an internal inquiry with respect to leaking of unpublished price-sensitive information on social media platforms like WhatsApp. The information which has been leaked pertains to the first quarter earnings of the bank, which was released on July 25th. SEBI has been investigating a series of leaks which have come out after news reports that nearly earnings of 12 companies were found in WhatsApp groups ahead of the announcement to the stock exchanges. The regulator has asked Axis Bank to look at all the processes and people involved in formulating the earnings, including people who are involved with respect to calculation of gross NPAs, net profit, or slippages of the bank. The regulator has asked the entire investigation to be completed within 3 months and submit the report within 7 days of completion of the internal inquiry.
And SEBI is also expected to consider some important reforms in the financial markets at its board meeting that's scheduled to take place later today. It is likely to relax entry norms for foreign portfolio investors that are looking to invest in the Indian markets. Besides this, SEBI may also rationalize the fit and proper criteria for foreign portfolio investors and may also allow listing of security receipts issued by asset reconstruction companies on the exchange platform. On to the stock of the day now. Motilal Oswal has initiated coverage on Mahindra CIE with a buy rating. Nikki Mirchandani joins us with the rationale behind this move and more on the brokerage note. Nikki, morning.
Hi Alex, the stock of the day today is Mahindra CIE. Motilal Oswal has initiated a buy rating on this counter with a target price of 297 per share, indicating a potential upside of nearly 19% for this counter. It says that the company is now at a stage where it's in a growth phase after 3 years of consolidation. Indian business seems to be doing well for the company and its fast-growing segment, and the parent advantage that the company has also ensures fiscal discipline for the counter. Acquisition of Billforge is also an excellent strategic fit for Mahindra CIE. This, along with EU business and mix optimization, operating leverage, is expected to drive the margin growth. We expect the earning growth and the limited capex to drive the operational efficiency, the capital efficiency for the company, and expect the revenue CAGR of around 8% in the span of 3 years. Margins are also expected to expand in the next 3 years, but by the calendar year CY19, by 260 basis point to 15.1%. A little bit about company. It's a manufacturer of forging parts in India and gets around 28% of its 38% of its revenue coming in from Indian business, while the rest is European. Caters to top customers like Maruti, M&M, Tata Motors, among others. Alex.
Thanks so much for that, Nikki. Moving on to stocks in news, Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Morning, Alex. To start off with, Colte Patil will be in focus. Now, the company is developing its Pune township, which is a 383-acre township in Hinjewadi in Pune, and for that they have signed a 193 crore agreement with KKR. Now, the township project, they said, will utilize the funds from this investment to be able to attain financial closure at the urban sector, and they'll be able to meet working capital requirements and also bring down the cost of outstanding debt, which is attributable to this development. So Colte Patil is one stock that we need to watch in trade today. You also have SBI, where the board approval came in yesterday to raise up to 8,000 crores via additional Tier 1 bonds by March 2018. And remember, this is in addition to the QIP of 15,000 crores that the bank had done back in June. Mohnish is another stock to watch out for with respect to developments on resolution, IBC resolution. You have a ET report which is saying that Aeon and JSW Steel have filed a 3,500 crore resolution plan for Mohnish, and the plan involves paying 2,500 crores to lenders, and there'll be an equity infusion of 1,000 crores. So do keep an eye out for that name. We did have, there were multiple reports of Aeon, JSW Steel being the front runners for this company. So now finally a resolution plan has been submitted. And lastly, you have Star Cement, which has received 158 crores towards capital investment subsidy from the central government. So these are some of the stocks to watch out for.
Thanks, Shraddha. Now, Nikki is back with the big brokerage calls of the day. Nikki, what do you have for us?
First one that we're picking up is Motilal on NTPC. The brokerage has maintained a buy rating on the counter with the potential upside of 19% at the target price of 211 per share. The revised norms provide relief for the low PLF inefficiencies that the company is currently facing. 3 of its plants had a PLF of less than 75% in FY14, which is further escalated in FY17 to 5 plants now. However, the revised regulatory norms do get some relief and compensate earnings by at least 2%, the visibility of which was also seen in the quarter gone by. Swapping flexible coal linkages also a positive for the company. Besides that, they expect an earnings CAGR of around 14% in the span of next 3 years, driven by your strong capitalization. This also makes the brokerage also says that the stock could re-rate as ROE could get a boost if capitalization outpaces your capex. The next one that we have on our list is Venturound Hyderabad Industries Limited. Now it's an initiating coverage there. It's a maintained buy rating with a potential upside of 21%. 3 of its revenue segment, they've given a breakup of how these segments have been doing. Fiber segment is a cash cow. Management is expected to launch few more segments there, and they're also planning an expansion for other pipe and fitting segment, and they also see a contribution coming in from the low costing AAC blocks, boards and panel segment. Third that we have on our list is Goldman Sachs on Sun Pharma. It has maintained a buy rating and the target price is unchanged. This is regarding the NDA filing of OTX 101 for dry eye disease. This is pretty much in line with the expectation and the guidance of Q3 FY18, and they expect the drug to get an NDA approval for this drug in the next 12 months. Commercialization is expected in the span of it's expected to follow in FY20. However, a potential generic entry of this drug, of a competitive drug, could reduce the overall potential for this drug going forward, as per the note.
Thanks, Nikki, for that. Let's move on now. While the debate on income inequality rages on, the world's wealthiest got richer by $1 trillion in 2017, more than 4 times compared to last year's gains. Here's a quick look at who made a killing in 2017. And here are a few stories that you should consider reading on the website bloombergquint.com. First up, a group of ministers tasked with finding ways to explore state-run Air India's divestment has decided to create a separate entity to pool in the airline's working capital loans and non-core assets. Tata Consultancy Services will have to defend itself at a US trial over claims that it's biased against American workers. A federal judge in California on Wednesday rejected a request from the company to dismiss a 2015 lawsuit accusing it of violating anti-discrimination laws by favoring South Asians. Well, with that, it's a wrap on this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.